The war for the Philippine telecommunications market is no longer being fought on the ground by pouring concrete and stacking steel. Control over the country's connectivity has migrated to artificial intelligence, satellite networks, and the cloud. For years, domestic providers have been caught in a relentless capital expenditure trap. To win subscribers, telcos had to spend aggressively on physical cell sites. This dynamic forced newcomer nito to warn investors they likely won't break even until after 2025, while legacy players bled cash to maintain their footprints. Now, Globe Telecom is making a calculated exit from that arms race. For 2024, they've slashed their infrastructure budget to a 5-year low of exactly 56 billion pesos. This chart compares their aggressive peak spending era against the new baseline. In 2022, Globe spent a massive 101 billion pesos to finalize their 5G and LTE backbone. Today, that spending is cut by nearly half. They aren't retreating, they are optimizing. To figure out if Globe's stock, trading as GLO, is a smart buy or a value trap, we must look past top-line budget cuts and analyze exactly how they are deploying that remaining capital across 3 highly specialized tech battlegrounds. The first battleground is the core network itself. Globe closed recent fiscal cycles reporting over 101 billion pesos in mobile data revenues, which accounts for 87% of their mobile service income. This automation preserves up to 50% of data capacity, compared to the historic 10% retention rate without human intervention. By weaponizing artificial intelligence, Globe protects its most lucrative cash cow from physical damage, while starving competitors of the disgruntled, offline customers who might otherwise switch networks. The second front is the urban cloud. With generative AI entering the mainstream, domestic data traffic is projected to explode. Managing that surge requires specialized hyperscale infrastructure. Globe is capturing this demand through its joint venture, STT-GDC Philippines. Their primary weapon is the Fairview Data Center campus in Metro Manila, purpose-built to attract international hyperscalers like AWS, Microsoft, and Google. Fairview utilizes a modular build strategy, bringing an initial 32 megawatts online by 2024, scalable to 124 megawatts. To meet environmental mandates, Globe secured agreements to run this massive, high-density campus entirely on 100% renewable energy. Globe is positioning itself to capture the high-margin business of leasing sustainable computing power to the world's largest tech firms. The third and final battleground is geography. Globe's terrestrial network covers roughly 97% of the population. Bridging the final gap to reach the last few percent in mountainous regions and remote islands using traditional steel towers makes zero financial sense. Their solution bypasses the ground entirely. Globe established a direct-to-cell partnership with SpaceX's Starlink, effectively turning low Earth orbit satellites into cell towers in the sky. During recent live pilots in the provinces of Bataan and Rizal, the technology proved it doesn't require specialized satellite dishes or dedicated hardware. It works seamlessly on standard, off-the-shelf LTE Android phones. Users standing in known dead zones were able to manage their accounts, send messages over Viber, and most importantly, execute secure financial transactions using the GCash app. This satellite-to-mobile layer provides a technical bridge to the most remote islands, potentially closing the coverage gap while bypassing the traditional drain of rural construction costs. When you aggregate these 3 fronts, the 56 billion peso pivot comes into focus. Globe has transitioned from a cash-bleeding utility into a hyper-efficient technology conglomerate. This hardware efficiency is further cushioned by their software ecosystem. GCash, operated by their fintech arm Mint, has seen its contribution to Globe's overall net income climb into the double digits. As capital expenditure drops to 56 billion, it pushes the trajectory toward positive free cash flow by 2025. Compared to the broader market, while competitors like PLDT and nito maintain heavier infrastructure spending, Globe is already monetizing its mature 5G backbone. They are strategically deploying less capital while extracting higher margins through network automation, hyperscale data center leasing, and deep fintech integration. Ultimately, the 56 billion peso pivot signals a move away from the race for physical footprint toward a future where the winner is the most efficient, data-centric operator in the archipelago.